Ooh, I think I'm live. Nice. Hopefully that should fix it. Account is ready to go. We are live. Losing a ton of money today. Welcome to another stream. It's gonna be an interesting day today for sure. Hope everybody is ready for what's to come. Markets are down all across. Starting to chat. Tools. Let's get the chat talk. Interestingly enough. Let's go to live chats. That is so weird. Okay. Go here. Let's just make sure the live stream is live and ready to go. Oh man. It's gonna be an interesting day. Whew. We have what? 4 minutes until market close. Market imbalance. We have a lot of tech that's selling down. It seems to be de-risking. There's nothing major that's freaking me out as we're moving into the close. So hopefully that continues and it's just a matter of freaking out a little bit, you know? It's just like, I mean, everything is bouncing off the lows, it's like going up into close. So there are traders starting to position. There's low volume today because people don't want to buy just before the data. As many people are just freaking out. You know, Max 7 is selling off into the close, it seems. Oh, you know. Hmm. Let's put in some audios just to figure that out. That should fix the mic right there. I should be a little bit quiet, but that should be better. Cool. And let's just test sound. See what Kevin has to say.
Group played a bunch, and this is how should I put it? They were good. We played some good Tesla plays, so I'm kind of excited here to see what happens here. But let's listen in here for a moment while I get this situated.
To focus on how much this fallout is ultimately going to cost CrowdStrike. By the way, we're going to hear from CrowdStrike's CEO George Kurtz tomorrow night on Mad Money with Jim Cramer. Scott.
All right, Steve Kovac, thank you very much. Okay, Seema, you can take this wherever you want to.
Can you feel the excitement, Scott? We're about 20 minutes away from the biggest chipmaker reporting earnings, and Nvidia and the broader chip sector trading down right now. Two things we'll be looking for. I mean, you've been talking about it, a window into big tech's capex spend for 2025 and beyond. Mizuho writing that clients are struggling to get overly bullish on the stock without any guidance on just how much the hyperscalers plan to spend on the future, plus an updated timeline on when Nvidia expects Blackwell to be shipped out to customers and how its gaming business is holding up. Options market predicting a 10% move in either direction. That's about a $300 billion swing, Scott. Stock trading at 125 and change.
All right, Seema, we'll see what happens, and we'll see you again soon. That's Seema Modi. Mike, back to you. I mean, VIX up a little bit today.
Yeah.
To your point, I mean, market's a little bit on edge.
10% move.
Just clenching up just a
go.
little bit again.
All right, got a little bit more situated. Do think it would be awesome to, frankly, just see the economy soft land. I don't really want a hard landing. You know, I'm afraid of that because I think it hurts startups, it hurts businesses, it makes everything a little bit harder. Implied volatility on Nvidia is 9.02, so it actually fell a little bit from a couple days ago when the anticipation was 9.35. So down a smidge there, but we'll get Hewlett Packard. We'll actually have Victoria's Secret as well for whoever is playing the underwear brand. So something else I thought was cool when we were playing Tesla today. I think I played Tesla like 3 times today, and each of the times made some money. The last of the times I think was the best. The last, oh, it doesn't want to show up, bummer. But the last time,
we're getting selling into the close.
Let's get
Last minute, make your trade.
Not a lot of volume.
All right, we'll see what happens in a few
There's
moments.
not that much volume today. I'm not surprised, you know.
But there's a lot ahead. Don't go anywhere. Let's spend this in overtime with Morgan and John.
So much money. It's been such a volatile day. It's been such a volatile month. It's crazy.
All right, there we go. Market has closed. We are now waiting for Affirm, Okta, Five Below, HP, obviously Nvidia, and
HP has
Victoria's
earnings.
Secret. Let me know in the chat if I've missed anything. I don't think I have. These are pretty big. I'm excited to cover these. And 20 minutes from now, we'll be covering Nvidia earnings. That'll be very, very fun. So stay tuned for that. We
Now
have
we expecting the release?
this morning. We had Abercrombie. We had Nordstrom.
Oh, Nvidia
We'll be covering the rest of
920.
these
So we still have
earnings
20
now
minutes
as
to
they
go.
come out. No earnings out just yet. Waiting for it. But yeah, here it is. This is what I wanted to show. This was this morning, or actually it was sometime today. I sent a little trend alert. I'm like, oh, Tesla's about to reject on VWAP. So we went for a quick little day trade. I bought a put for 131 and sold it for 218. Quick little 66%. That was pretty cool. Anyway, if you want to see those, I played that trade 3 times. The first 2 times were profitable, though not as nice as the 66%. And then the third play was a nice 66%. So we just kind of kept going in on the ups and downs. It was fun. So if you want to see those, always make sure you're part of the Stocks and Site group. And you can learn a lot more over at meetkevin.com. We've got the Labor Day sale going on now. Okay, with that said, let's get into what we've got. Salesforce comes out. Q3 revenue miss. Salesforce misses on Q3 revenue, but Q2 beats. So Q2 beats. So it's up 3%. Q2 sales come in at $2.07 billion. Professional services beat at 561 versus 531. Q2 services revenue beat at 226 versus.
The majority of people thinking we're gonna beat expectations. The big question is gonna be what's gonna happen with market predictions. Sorry, guidance coming forward. And then the market rumors about Blackwell chips. We'll see what happens. Oof. We bounced on the 1, 2, 3, which is nice. And we did see some interesting volume into the close, but oof. Oh man. The cues are nice. I mean, everything is just quiet, you know? De-risking of the table, a ton of geopolitical things that is actually affecting the market. Everything seems to be going smoothly except for the fact that ooh, it's like slowly we're like, you know, people are hoping to see some kinks, and we are seeing some small kinks, but the question is like how big they are, you know, and hopefully they shine some light on that. Oof. Just all eyes are on this stock right now, So short term, like if this is a popularity contest, we're about to see exactly who likes it and who doesn't. It's like NVDA. Let's just go. NVDA. Let's go worldwide. Let me have a look at something. Let's just look at the Google Trends, see how they're doing. Let's see. It's like bam. Let's go the last 90 days. Let's go even more. Let's go to the last 12 months. So you see, just like there's been so much interest in it lately, and we're definitely going to be spiking. This is all we're going to be talking about for the next 2 days, 3 days. Whew. Why is this guy not speaking? You know? Alright, that's working. Cool. Alright, so they should be speaking. They should be. So we should be starting the next 15 minutes. So let me know if you have anything you want me to look at. But right now is the waiting game, Interesting. We are getting that hype. Oh man. It's like right now we're in the eye of the storm. Either we've passed it and it's done, or we're in the middle of it. Because like what we've seen today, I think my active trading portfolio is down 3% today. 3-4%. We could see more. What would happen to the Qs? Oof. Everything's down today too, which is like Bitcoin was starting to act like an omen again, so we'll see if that continues. But Bitcoin down, tech's down, even the dollar. The dollar is up today, so there has been a movement to safety. You know, Interestingly enough, yeah, I mean, like we got financials coming up a little bit, and not even like services, just like healthcare, industrials. So we saw a move to safety halfway through the day, and then we're hopefully gonna get it back. But yeah, the SMCI debacle definitely created some fear around this stock. Even though I believe it has nothing to do one with the other. Like one sales case is the other computer parts, you know. So yeah, it's just oof. Salesforce had today too. And Kevin was talking about that today. Yeah, SMCI 19. Actually, they bounced back. I think their lows was pretty ugly today. Oof. Oof. Definitely in the downtrend. Bottom of the downtrend though. Man, I wanted to short here. I was just early. That's the problem when you're early. Like I think I wanted to short here. I wanted to short at 1,000. Would have been good money. But it's a scary trade. So much volume today though. For the usual volume that it sees. AMD could bounce off today too. That's an interesting one too. Their moves were pretty good. See if there's any news. There's nothing though. Like, I don't think we get this slow down right away. Oh man, market's doing nothing. We're just flat. We got bought into the close, and now we just wait. Just refresh this just in case. Because I'm not hearing them. That's kind of freaking me out.
So in 10 minutes time now at
There
20
we go.
past 4 p.m. Eastern time, we expect earnings from Nvidia reporting Q2 2024 earnings, the last of the Mag 7 mega cap stocks to be printing this season. Estimated EPS of 64 cents with an estimated revenue of $28.56 billion.
Right now, there's so little volume too. We're definitely going to see some crazy moves around the stock, but ooh, OpenAI is in talks for funding round of 100 billion. No, valuing it at 100 billion. Nice. That
According
means
to
there's money
Crosby
coming
of
in.
LPL Financial on the Nvidia earnings, says that there is the issue of the delay in chip sales based on the advanced Blackwell construction that needs to be addressed, and questions as to whether companies can monetize the AI capabilities they're allocating billions for their AI infrastructure outlet to remains to be seen.
I think it's true, but then you run into the idea that like if you're not keeping up with the technology, there's more risk of staying outside than staying inside. You know, staying outside than staying inside. You know, so you gotta spend the money. Otherwise, like they're just gonna go to your competitor, and then you're just gonna be behind. Oh, every single big company. I think one of the statistics that I heard today was like 50% of revenue for AI chips comes from like the Mac 7, like so the Mac 6 in this case, like the big tech companies. So, it's like 50% people, like, it's like 50% is the big players, and then 50% is anybody else that wants to even try to compete. And then the moment you sort of like alleviate that supply constraint, you're just going to have a bunch more coming from other places too. Whew. I think the market is right now is thinking that we're going to get something that's going to spook the market, A lot of people like I think it's a given. The question is how much do they beat by? And I think that they can beat pretty strongly. I think we could definitely see like a 2 billion beat. So we'll look at my estimate. Should be done though. Bam. Whew. Let's have a look at what ended up being the proper estimates. Bam. It's a lot of people making predictions on this. Whew. 75 cents is what I'm thinking. Maybe they do more. But they've been beating expectations like there's no tomorrow too, you know. Yeah, it's like 6-1, 4-7. This one they beat like crazy, and then they came back to reality a little bit. 7-5 is the next one. Crazy. We got 7 minutes before we see the results. Nvidia investor relations. You're gonna see the results here, and then we're gonna be able to hear them too. What's NVDA at right now? 65. Great. Yep. Oh man. People playing with it. It's like right now, what's the volume at? 73,000, 79,000.
In 5 minutes' time now, at 4:20 p.m. Eastern Time, we expect earnings from Nvidia reporting Q2 2024.
It's focused now, boys.
Estimated EPS
and
of
girls.
64 cents, with an estimated revenue of $28.56 billion.
Problem is the stock is pricing imperfection. They've been more than perfect though. The question is, can they keep it up? Oh man, there's so many competitors. There was one that I heard about today. They're still so far away in terms of production, but in terms of what they will be able to do, oof. 125, like we could see the stock touch 140. We could see the stock go back to the 110s. I think the implied move for today. Like, let me go to the 30 so you can open up the chart a bit. It's like the implied move right now. It's like 17%, which is nuts. It's like if we go to the daily, that's how much. It's like right from today. It's like we're talking about an implied move of 150 today, like almost 140, like 145. It'll be nuts. Yeah, but I think the implied move it's 10% up or down. So I think 140 today potentially, or down. Let's go here, bam. They're gonna go 10% down. So we could go to like 110. And then the whole overall market is just like, it's just dan, 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 dan. So we could see the stock go all the way to 130. Oof. 140 or 115. 115 would hurt. 115 would hurt a lot. But we've been at those levels before. We are at top resistance levels right now, So it would have to be something amazing for us to break through that. Let me have a look at the options market real quick. What's the Nvidia? Really, that little? Yeah, outrageous. Huh. Crazy. Huh, we sold off until the end. Nice. Oh, scary times. We got 3 minutes to go. In markets, this is like, you do your research, you do your things, you set up your place, and then you play out. Is it time to buy? Is it time to sell? We'll find out today in the next 2 minutes. Oh my goodness.
649 divided by 637.6, about a 1.7% beat. Okay. So now we're going to be going on to Nvidia. This is
Apparently
obviously
HP.
the big boy
HP
everyone's waiting for.
didn't like the results too
So
much.
we'll
It's
cover
down to
that.
32, bouncing back.
And then we'll go through some of these reports and we'll wait for the earnings.
Holy. Bitcoin holding at 59. It's gonna be interesting to see what happens, but they'd
Shortly expecting Nvidia Q2 2024 earnings.
1 minute. 1 minute to go. Boys and girls, get ready. When was this? August 28th? This was today? Oh, this was today. Market's rallying. Motherfuckers. Market's rallying into the... Holy! Market's rallying just before the results. People are buying in. I bet you it was a player that just like dumped the shares just because of the low volume at today. Oh,
Nvidia earnings coming through now. Adjusted EPS at 68 cents, which is a beat on
oh,
estimates
boom.
of 64 cents.
On point.
Revenue a beat at $30 billion and estimates of $28.86 billion. The gross margins are a beat at 75.7% on estimates of 75.5%. Data center revenue a beat at 26.3 billion on estimates of 25 billion.
Wait, what did they say?
Nvidia maintains their quarterly dividend at 1 cent a share. Looking to forward guidance, they see Q3 revenue at 32.5 billion, which is plus or minus 2% from the prior estimate of 31.9 billion.
Nice. Revenue should be coming in hot. Let's go. Market selling off at the
Nvidia
beginning.
shares
This
up around
rallies.
1.5% in post-market trade here.
What did they say? What was the revenue? Dang.
So just to recap there, Nvidia's adjusted EPS at 68 cents, beat estimates of 64
Yeah.
cents, revenue at 30 billion, beat estimates of 28.86
Damn,
billion.
1.5. People are
Nvidia
expecting
also
2 on
approved
the
an
high
additional
end.
$50 billion in share buybacks. Seeing more forward guidance come through now as they see their Q3 adjusted gross margin at 74.5 to 75.5%, which is within the prior estimate of 75%.
Nice. So gross margins are a little bit lower. Ooh, interesting, but they're still high.
Nvidia also comments that Blackwell samples are shipping to partners and customers now. Also reporting their Q2 gaming revenue at 2.9 billion, which is a beat on estimates of 2.79 billion.
So let me show you guys what's happening here. So Price is trying to figure out what's happening here. We're still waiting for the Blackwell stuff. We pumped just before the releases, and then we went all the way back down. And then we're bouncing back. We're still sort of in no man's land at the moment. The results are good, as expected. We were expecting a beat. On the high end, we were expecting 2 billion to be fairly priced, and it seems that we are fairly priced. We got, I think, 30 billion, which is fantastic news. Have a look. So yeah, Nvidia's revenue is at 30 billion, and then the expected...
So again,
The
Nvidia
EPS.
shares rising upward of 1% in post-market trade following the Q3 sales forecast topping estimates.
Nice. This is good news. This is good news, boys and girls. I mean, like, it's news, you know what I mean? Like, it'll be interesting to see what they say in the call. Oof.
Call together. We'll go
Something
knock
like
all that stuff
Batman.
out. Yep, there we go. Okay, good. So, let's see here. Is NVIDIA out yet? No, NVIDIA's not out yet, but we're gonna watch for it here. Oh, look at that. Billion. The estimate was 28.86. That's a 3.9% beat. These are good numbers, man. These are good numbers. Q3
This
revenue.
continues.
Q3 revenue expected to be 32.5 billion. It's 8.3% up. That let's see here. I don't know. I mean, I see the stock falling there, but that's actually pretty good. Q3 revenue expected to be up 8.3%.
Nvidia shares now are raising gains post-market down close to 1%.
The current Q2 was 30 bill versus the 2886 Wall Street was expecting, which is pretty good. 2886 divided by 30 divided by 2886. That's a 3.9% beat. 3.9% beat. That's pretty good. They're approving an additional $50 billion in share
Nvidia
buyback.
also comments
Oh my
that their
gosh, stock, baby.
Blackwell production
Blackwell
ramp is
samples have started
scheduled to
shipping.
begin
Okay,
in
Blackwell samples
Q4.
started shipping. Well, that'll excite some people. Additional $50 billion share buyback.
So again, Nvidia stocks fluctuating here as traders tussle over this earnings print.
Adjusted EPS comes in at 68 cents. 68 cents versus 64 cents expected. Maintains dividend at 1% per share. Dividend at 1 cent per share. Pretty good, pretty good. Let's see how the other ones are moving here. Tesla's still down about 43 bips on that, and the Qs are up about 10 bips. Just not really seeing much movement there. Affirm's still doing very well.
Nvidia shares
So
extending
dividend's still
declines
there.
down
Gaming actually beat
3.5% in
expectations. That's a
post-market
surprise.
now.
So Q2 gaming beats at 2.9 billion versus $2.79
The
billion.
post-market
said.
S&P and
Data
Nasdaq
center
extending
revenue, let's
declines
see.
as
So,
well.
I mean, most of their money comes from data center revenue, right? So data center revenue comes in at 26.3 billion versus the estimate of 25.08. So that's still B. 26.3 divided by 25.08. It's about 4.8%.
Damn.
4.8%. Come on, baby. Beat. Okay, I guess I can get rid of that. There we go. So it's a B. We expected them to beat. Their Q2 margin was good too. I'd like to get a little bit more on forecast, honestly. Q2 adjusted gross margin was
Where's
75.7%
data?
versus 75.5 expected.
Nvidia
Which
comments
is
that
pretty good
changes
as well
are
for
needed to
maintaining on
improve
that same
Blackwell
margin.
production.
Remember, they're a chip designer, not a manufacturer. Blackwell production
Oh, there
ramp
we
is
go.
scheduled to begin in Q4. Okay, the stock's falling on that
Losses
now.
extending to
As soon as
6%
that
in
came through, Blackwell
post-market
production
trade
ramp
now.
scheduled for to
Yeah, the
begin in
Blackwell.
Q4. Okay, market did
The
not like
Blackwell
that. Market
news
liked
is
the sample
definitely
for it,
affecting
but
it.
Nvidia, let me
My
actually get the doc
goodness.
if I can here for a sec. All
Yeah,
right.
this is not updating. Crap.
Okay. So now
Oof.
we're gonna
It
get our
hurts.
doc. Is this their annual? Oh, they're falling now, huh? Down about 4.8%. I guess it can't satisfy the investor community. Is it? No, we should be getting Q2. So why it's not out yet? I don't see it on their website yet. All right, whatever.
Changes
So
needed to
we have the
improve
Q2
Blackwell
6.5
production. That's what
call,
they're.
and that's gonna be out soon.
Nice.
Quarterly presentation. Press release is not out yet. CFO commentary's out. Okay, we can look at that. Look at CFO commentary. And oh my gosh, stock's down a lot now. What's going on? Down about 7% now. Dude, what the hell's happening?
Nvidia shares down
Nvidia says changes
8%
are needed to improve
post-market
Blackwell
now.
production. Oh no.
Again,
That's,
S&P
I said going into
extending
Nvidia.
declines.
I go, the one thing that could screw this up is bad news on Blackwell. Now, I actually thought we'd have good numbers here. We'd beat and it'd go up and everything would be fine. Ooh, but the one thing that could screw it up is that next growth cycle. Scheisse. So, Nvidia.
There we go.
Okay, we're gonna get a
It's
lot of
finally here.
details. In,
Nvidia also expects
okay,
several
now it's
billion
coming up
dollars
again
in
because
Blackwell
Nvidia
revenue for
expects several billion
Q4.
dollars in Blackwell revenue in Q4. Nvidia, it says, Nvidia says changes needed to improve Blackwell production. Yeah, that's not great.
Revenue 30. Damn. They continue to grow like crazy, but
Okay, so you're getting
be
a little bit of
interesting to
a
see.
bounce now. Still expecting to recognize billions of dollars of revenue. I mean, I would hope so.
26
Data center
billion.
revenue
That's
is like
so
26
nuts.
billion per quarter. So I hope you have billions of dollars of revenue in Q4. Keep in mind their Q4 is
It's
well, they just reported
154%
Q2
from a
25,
year
so they're
ago.
exactly a year ahead, basically. Anyway, so still expects several $billion in Blackwell revenue.
Is it buy the rumor, sell the
Q4,
news? The
though.
question is do we buy it back,
Okay.
right?
So we'll get some details. Whatever details they give
ARM
us
and
on the
AMD
earnings
shares
call for
also
this
following
will
Nvidia lower
dictate,
after
I
earnings.
think, the direction of the stock.
But we're
tomorrow.
buying it back,
Some of
you
these
know?
post-market losses being pared back now, so we're down around
Let's see.
3% on Nvidia shares post-market.
Okie dokie. Let's go through the dog.
Gaming is
See
healing.
what we got.
With volatility's crazy.
Okay. So here we go. We specialize in markets where computing platforms can provide tremendous acceleration applications. Yeah, we already know that. 10-for-1 forward stock split was completed on June 7th. Revenue was $30 billion, up over
32
double
billion.
from a year ago,
Damn.
15% sequentially. Still very good.
Send that to my group.
Data center revenue was up 16% sequentially. It's also still very good.
Bam.
Strong Hopper GPU platform.
32.5 billion. That's so much. That's 2.5. They're growing so quickly. They're probably going to beat that by another 1.5 billion. So we're talking about what, like 33, 34 billion next? Wow. This company's making so much bank. Of course, the gross margins are down, but it makes sense for them to be down, right? Because they're investing in like making new chips.
That sounds pretty good, honestly. They're still buying this stuff.
You know,
the old stuff while they're waiting for Blackwell.
Stock's bouncing. Nvidia's
Network
bouncing. It's healing.
Up
We're still
lot.
down. We're still losing
InfiniBand,
tons of money,
Ethernet
but
for AI. The InfiniBand network they have, I mean, it's just industry class. It's the best in class, I should say.
it's gonna be interesting to see what they say about it.
Of our Blackwell architecture in the second quarter. We executed change to the Blackwell GPU mask to improve production yield. We executed a change to the Blackwell GPU mask to improve production yield. Blackwell production ramp is scheduled to begin in the fourth quarter and continue into fiscal 26. We expect to ship several $billion of Blackwell revenue. Hopper demand is strong and shipments are expected to increase. still in the second half of next year. Okay. Automotive revenue was up 37% from a year ago and 5% sequentially. That's pretty good too. AI cockpit solutions. Remember, this is a competitor to Tesla, right? Tesla's FSD is not the only one out there. And in fact, I wouldn't be surprised if this actually could affect Tesla stock. This mention right here, and maybe Tesla stock falls on talk about how this is growing so well. This is just really showing you how much your competition is growing. Gross margins decreased sequentially due to low-yielding Blackwell material and a higher mix of new products. That's reasonable. It's because you're investing. That's fine. I mean, honestly, am I really worried about the balance sheet? No. They generate cash like crazy. Let's see here.
What a day.
Non-affiliated investments.
Not every day is a good day in the market, boys and girls.
Okay.
Damn.
Well, we're about 30 minutes away from the earnings call. The stock's now stabilizing at about 3.5%. Remember, the stock was down about 2.1% on the day. Okay.
Sitting at 120. We touched 115.
So you can see that decline in margin right here. That might lead to some heart palpitations for some investors. People really like to see
it's gonna hurt.
margin growth. So not ideal here. This is the first, I think this is probably one of the first like downs you've seen on margin. But it's okay. Like you would expect that. That's totally reasonable. Honestly, the fact that graphics are going up again is kind of cool. So I really like that. I mean, I love the Nvidia chips. I'm, running a 4680 right here. Is that what it's called? 40. Is it no? 4680 is the battery. What? I don't know why you said that. That's the Tesla battery.
4080.
What are these called? 4960. What the hell? What do I have? Hold on. Device manager, display adapters, 4090. That's what it is. 4090. Good gracious. Too many numbers in this world. Good lord.
Yeah, I'm running a 4680 graphic card. Have you seen my new graphic card, everyone? It looks a lot like a can. Hello, everyone. If you want,
This definitely impacts the rest of the market. Oh man, everything is hurting. Everything. Yeah, we're coming back to the lows. Damn. People are buying back, which is nice. There is demand for it. It could be traders just before, but oof. What a drop. Oh, what a drop. Oh, what a drop. It's like they're still generating tons of money. It's just they're generating, it's like people are scared of the Blackwell and what that entices. Oh, man. Insanity.
want to see the inside or Tesla race, really. But it's worth noting that this is essentially direct but future Tesla competition. The better Nvidia GPUs become, the more rapidly Tesla's moat may decline. I think that's a reasonable thing to say. I know some people don't want to hear that, but how do I put a color on this? I don't want it to seem like it was something they wrote. There we go. All right, good. I should probably save my work because, Adobe's pretty famous for crashing my stuff. Oh, are you kidding me? It crashed. Oh, Adobe, I hate you! You suck! You suck!
Man. Bang. I was spot on, which is great. I was spot on my predictions. I was not a spot on their reaction. But it seems to be an overreaction. You know what I mean? Like there is buying, volume, you know. Yeah, we saw some selling, but right away then we just saw it by like being bought back, you know. EPS was 68 cents, which was a beat on 64 cents expected. So they did fantastic. It was a fantastic quarter. Fantastic quarter. And revenue, we had, yeah, nuts. Yeah, it was like 64, 65, and then we touched, actual was 68, and then revenue was 30 billion. And now they're raising their guidance going forward to 32.5 from 31.7, which is nuts. They're probably going to sell more. The thing that's like spooking markets right now is just the fact that Blackwell is delayed. You know? But it doesn't matter.
So
You know what I
following the
mean? Like,
close of the US cash
even
equity
better
markets, just going to give you
if it
guys a
is.
quick market wrap of the session today. So big tech fell in late trading today as Nvidia's sale forecast disappointed some investors, hoping for more after the billions spent on the revolutionary artificial intelligence tech. So a $286 billion ETF tracking the Nasdaq lost spot 5%, while Nvidia sank 3% after the close of irregular trading. Third quarter revenue will be about $32.5 billion, the company said. Though analysts have predicted $31.9 billion on average, some estimated a range as high as $37.9 billion. Sales in the fiscal second quarter, which ran
What do
through
you mean it was
July,
low?
topped analyst
My
projections.
expectations? No, I
Stocks
hit it. Look,
experienced a significant volatility in the run-up to the chipmaker's highly anticipated results, which
this was
were the last of
my
the Magnificent Seven mega caps to
EPS.
be reported. At
My
one point, the S&P 500 was on track for its worst drop since August 5th disaster.
give me a
The
second.
gauge moved away from that
Give me a
mark,
second.
closing down spot 6%. Nasdaq 100 declining 1.2%. The VIX, which is Wall Street's favorite volatility index, rose approximately to 17. Treasury 10-year yields rose 2 basis points to 3.84%, and Bitcoin dipped below 60K.
Yeah. So markets right now are just sort of punishing this stock because we are expecting perfection. Like the thing is just like currently the stock is pricing in perfection. You know what I mean? Like we are expecting perfect execution on how we are gonna see this AI world play out, right? Are we really gonna see that? No, right? It's new technology, it's new process, it's new manufacturing, it's new sort of everything. So there's gonna be hiccups happening, but we're still ahead of the game, you know? Now what we're seeing is like minor volume, you know what I mean? Compared like right, like volume can move it, can easily move the markets right now, right? Based on what you need on like it's out of hours trading, right? So the move will come tomorrow based on what they say in the call and stuff. The call tends to move it on the upside too. But yeah, like we were expecting perfection. I mean, like we're still not low, you know what I mean? Like we are at that bottom of that range, but we're still holding pricing, you know? Yeah, I would say, you know. But with them, it's like, look, like they are making the thing is just like right now, it's like they are making the places where we're gonna put these chips. This demand will continue moving forward. The Blackwell will allow for a ramp up in compute and a decrease in power, but you're still building the infrastructure in order to house this, you know. It's buying land, it's buying buildings, it's getting the infrastructure, getting the energy, getting everything inside, right? So yeah, I mean, short term, definitely we're gonna see some volatility. I mean, we've seen what have we seen with this stock? I mean, like what's the ATR, right? Like ATR right now is like on the daily is sitting at what, $6? Like, and we moved around that much, you know? Maybe a little bit more just because, but for the volatility that we've seen, we're still sitting in somewhat level of resistance. 120, I would say. As long as we don't break the 120 level by the end of the day, we should be fine. We could see a little bit more weakness tomorrow too, though. But overall, the whole market's gonna sell off, right? Because this is like, oh my God, it's not working as intended. But really, you know. I was looking at a video that says this like apparently it has to do with the way that the chips connect, and when it comes to the making the total production of this is like, it's like every single little shift affects the production, and mass scale, it becomes a pain in the ass, But yeah, it hurts. I mean, it's gonna hurt today, but we're still outside of what I think the channel is, so we could still break out. It is the best story right now so far. So that's what I like, at least, It's the fact that it's the best story in markets. There's nothing that scares me from it, other than the fact that we've seen it. Yeah. But yeah, I think since the start of August, like we saw at the start of August, we saw this stock hit freaking 90, like 90. It was a gift. A gift. And then all of a sudden we see this rally. It's like, yeah, we're getting some price, like, we're getting some consolidation. We're probably not going to be moving what's it go? Well, actually, this changes a little bit, because from 65 to, wait, 1, 2, 3, 4. So we take out the 19, we put in the 65. So EPS, so the PE ratio dropped substantially today too. And the fact that we're not seeing that much price increase, tomorrow will be an interesting one for sure to watch. Could figure that out, actually. What's the trailing? So we're talking about, let me have a look. It's calculated time. So 0.29 plus 0.4. No, what's the actuals? All right, that's not. What am I looking at? Yeah, that's it. 0.43 plus 0.56 plus 0.65. What's the price right now? Sitting at 123. Are we still 120? Oh, 124. Like, we're bouncing. Like, it's like the market was sort of expecting this. That's why we saw this. Like, why we saw the market sell off today. We saw some rally from Tuesday, but today we did sell off into this, and we're still within. Like, it just feels that we are sort of in this like consolidation range of just trying to figure out what this stock's worth. P ratio is price divided by 125 divided by 1.93. That gives me a P ratio of 64. Still pretty high. Crap. Did I do this right? Yeah. Pum, 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 pum. Yeah. I did. Oh, man. The market seems to be healing. So many lines in this chart. I need to tighten this up. It's not nice. Is it time? The question is, do we buy NVDA into the close? into the end of the week by tomorrow? Bam. Probably a good entry point though. Volatility is crazy today. Crazy. What's the SPY now? SPY's down 1%. Should have stayed in SPY instead of moving in. SPY would have been nice. Holy. Have a look at what he says.
Right here. This is your recession.
I don't want to talk firm.
Let's see here. Total revenue net 659. Total revenue as a percentage of gross merchandise. How did they increase this? Now that's pretty impressive. So they're making more money on each loan. Is that because they're taking riskier loans? That's pretty good. Okay, so
He's going into a firm.
yeah,
Ugh.
I sent it at.
What's the overall market doing so far?
Trend alerts. Let's see.
Damn, that would have been free money.
Find my darn thing. Whatever. I'll just show you. I'll put the little day trade up here. So this is the last one that I did, and this is kind of how I send them. So you could see this was right around 1-ish, which is about 11 our time. No, sorry. What is this? This is 1. Where are we?
Oh, it hurts. It hurts. It's the right move that it seemed. Bam. What's SMCI doing? Is it getting? Yup. Another 2% down, so back to 21% down. Damn. Oof. Heavy day. Heavy, heavy day. Heavy day. Bam. Bam. Man. Mm. Funny enough, we did touch. Like, we did go down, but it's not as expected. That we do. The question is, do we see a bounce? I mean, like, we could just be retesting and then going back up. Apparently, so, according to a couple of analysts, like, when the CEO Jensen Huang, I don't even know if I'm saying it right, but yeah, when he does it, when he speaks, he's gonna like make the market bounce, like according to the peeps. Because they did a little bit of clarification and just like what is happening with the Blackwell, what is expected, and what is not, like how long is the delay gonna be. I think right now we're pricing in like that, 3 months of delay. But yeah. Uh, 30 billion. Insane. I need to. I'm gonna need the link to the call. Need to find that. Oh man. Today's been the whole day for this. The whole day. Like volume is not crazy though, like we're not getting massive sell-offs. We could see it tomorrow, but KTR like the highs, it's like 9 bucks in a day. It's just like a 10% move. So how much market cap did they lose today? I think markets were expecting a bigger move. Press media says, where is this? Newsroom. Take me here, and then we're gonna go. Hmm. Where's the link to the earnings call? I'm having issues finding it. Video brief. No, I don't want this. I want newsroom. Oh, oh, it's sitting on 120. It's getting worse. It's getting worse. It's getting angsty. Hmm. There we go. Bam. Oh man. We got 9 minutes. This is nasty though. They're making so much money on it. It's not even funny. Gaming is healing, which is nice. The auto is interesting. Hmm. Oh man. Not all days are good days. Would we get them? Can you hear this, guys? Oh man. It'd be interesting to see what CNBC has to say about this. Oh, Nvidia sitting at 120. Which is still not a bad number. What's the forward? We got 6 more minutes before this starts. Oh man. Oh, let's see how bad this Blackwell delay is. It's like they're not even lasting in the shelves. It's crazy. Whoa, man. Let's see what they say. Hopefully they're like, look, it's gonna be delayed. It's not that bad. Let's go. All right.
Sequential margin
That's what I
decline
thought.
from 78.4% to 75.1% was expected.
Go here.
We did see. I like that the automotive was great. Automotive risk for Tesla up 5% Q on Q and 37% year on year. Okay, we hit that. We're gonna get a lot more detail here on Blackwell in just a moment.
It's the
It's
Blackwell.
not annotated. It's a little harder for me.
It's
to
what we expect on
remember what we
Blackwell.
talked
That's what's
about.
gonna drive
Cash flow is excellent.
the price of the stock for the next
Talked
2
about
weeks.
this. Inventory was 81 days. We could talk about the cloud service providers. What percentage came from them? That was over here. This section right here. So 45% of data center revenue, which data center revenue represents 26 divided by 30 over 85% of Nvidia revenue comes from data center sales. Data center revenue comes from CSPs, cloud service providers. There we go. Okay. They still expect Hopper sales. I think that's wild. It's actually a good thing. Still expect strong year-on-year growth. Wait, no, that's from last. Okay, sequential growth in customers continue to accelerate. There we go. This was the line right here. This was a really good one. That one. Customers continue to accelerate their Hopper architecture purchases while gearing up for Blackwell. Gearing up to adopt Blackwell. There we go. Okay. Get a Dell.
Oh man. So far, I'm not reading anything that freaks me out. You know? So far, everything seems to be expected. Like, sure, we had the rumor play out. You know? The question is sell the rumor, buy the news? Could we go the other way around? Change the Blackwell GPU mask. Yeah. This is interesting because they're paying so much money. Like if you were working at Nvidia and you had like options or stock comp and you didn't like, like that just became massive, you know? So they make sense. You know what I mean? They're doing so good. They've
Good
got to get
afternoon.
paid for it.
My name is
There
Abby,
we
and I will
go.
be your conference operator today. At this time, I would like to welcome everyone to NVIDIA's second quarter earnings call. All lines have been placed on mute to prevent any background noise. After the speaker's remarks, there will be a question and answer session. If you would like to ask a question during that time, simply press the star key followed by the number 1 on your telephone keypad. If you would like to withdraw your question, press star 1 a second time. Thank you. And Mr. Stuart Stecker, you may begin your conference.
Thank you. Good afternoon, everyone, and welcome to NVIDIA's conference call for the second quarter of fiscal 2025. With me today from NVIDIA are Jensen Huang, President and Chief Executive Officer, and Colette Kress, Executive Vice President and Chief Financial Officer. I would like to remind you that our call is being webcast live on NVIDIA's Investor Relations website. The webcast will be available for replay until the conference call to discuss our financial results for the third quarter of fiscal 2025. The content of today's call is NVIDIA's property. It cannot be reproduced or transcribed without prior written consent. During this call, we may make forward-looking statements based on current expectations. These are subject to a number of risks, significant risks, and uncertainties, and our actual results may differ materially. For a discussion of factors that could affect our future financial results, please refer to the disclosure in today's earnings release, our most recent Forms 10-K and 10-Q, and the reports that we may file on Form 8-K with the Securities and Exchange Commission. All our statements are made as of today, August 28, 2024, based on information currently available to us. Except as required by law, we assume no obligation to update any such statements. During this call, we will discuss non-GAAP financial measures. You can find a reconciliation of these non-GAAP financial measures to GAAP financial measures in our CFO commentary, which is posted on our website. Let me highlight an upcoming event for the financial community. We will be attending the Goldman Sachs Communacopia and Technology Conference on September 11th in San Francisco, where Jensen will participate in a keynote fireside chat. Our earnings call to discuss the results of our third quarter of fiscal 2025 is scheduled for Wednesday, November 20th, 2024. With that, let me turn the call over to Colette.
Thanks, Stuart. Q2 was another record quarter. Revenue of $30 billion was up 15% sequentially and up 122% year on year, and well above our outlook of $28 billion. Starting with data center. Data center revenue of $26.3 billion was a record, up 16% sequentially and up 154% year on year, driven by strong demand for NVIDIA Hopper GPU computing and our networking platforms. Compute revenue grew more than 2.5x. Networking revenue grew more than 2x from the last year. Cloud service providers represented roughly 45% of our data center revenue, and more than 50% stem from the consumer, internet, and enterprise companies. Customers continue to accelerate their Hopper architecture purchases while gearing up to adopt Blackwell. Key workloads driving our data center growth include generative AI, model training and inferencing, video, image, and text data, pre- and post-processing with CUDA and AI workloads, synthetic data generation, AI-powered recommender systems, SQL and vector database processing as well. Next-generation models will require 10 to 20 times more compute to train with significantly more data. The trend is expected to continue. Over the trailing 4 quarters, we estimate that inference drove more than 40% of our data center revenue. CSPs, consumer internet companies, and enterprises benefit from the incredible throughput and efficiency of NVIDIA's inference platform. Demand for NVIDIA is coming from frontier model makers, consumer internet services, and tens of thousands of companies and startups building generative AI applications for consumers, advertising, education, enterprise and healthcare, and robotics. Developers desire NVIDIA's rich ecosystem and availability in every cloud. CSPs appreciate the broad adoption of NVIDIA and are growing their NVIDIA capacity given the high demand. NVIDIA H200 platform began ramping in Q2, shipping to large CSPs, consumer internet, and enterprise companies. The NVIDIA H200 builds upon the strength of our Hopper architecture and offering over 40% more memory bandwidth compared to the H100. Our data center revenue in China grew sequentially in Q2 and is a significant contributor to our data center revenue. As a percentage of total data center revenue, it remains below levels seen prior to the imposition of export controls. We continue to expect the China market to be very competitive going forward.
Like my
The
volume should be
latest
good
round
now.
of MLPerf inference
It's like it needs to be
benchmarks
very close to my
highlighted
head.
NVIDIA's inference leadership with both NVIDIA Hopper and Blackwell
You should be able to hear it
platforms
just fine now.
combining to win gold medals on all tests. At Computex, NVIDIA, with the top computer manufacturers, unveiled an array of Blackwell architecture-powered systems and NVIDIA networking for building AI factories and data centers. With the NVIDIA MGX modular reference architecture, our OEMs and ODM partners are building more than 100 Blackwell-based systems designed quickly and cost-effectively. The NVIDIA Blackwell platform brings together multiple GPU, CPU, DPU, NVLink, NVLink switch, and the networking chips, systems, and NVIDIA CUDA software to power the next generation of AI across the cases, industries, and countries. The NVIDIA GB200 NVL72 system with the 5th generation NVLink enables all 72 GPUs to act as a single GPU and deliver up to 30 times faster inference for LLMs workloads and unlocking the ability to run trillion parameter models in real time. Hopper demand is strong and Blackwell is widely sampling. We executed a change to the Blackwell GPU mass to improve production yields. Blackwell production ramp is scheduled to begin in the fourth quarter and continue into fiscal year 26. In Q4, we expect to ship several $billion in Blackwell revenue. Hopper shipments are expected to increase in the second half of fiscal 2025. Hopper supply and availability have improved. Demand for Blackwell platforms is well above supply, and we expect this to continue into next year. Networking revenue increased 16% sequentially. Our Ethernet for AI revenue, which includes our Spectrum-X end-to-end Ethernet platform, doubled sequentially with hundreds of customers adopting our Ethernet offerings. Spectrum-X has broad market support from OEM and ODM partners and is being adopted by CSPs, GPU cloud providers, and enterprise, including xAI, to connect the largest GPU compute cluster in the world. Spectrum-X supercharges Ethernet for AI processing and delivers 1.6x the performance of traditional Ethernet. We plan to launch new Spectrum-X products every year to support demand for scaling compute clusters from tens of thousands of GPUs today to millions of GPUs in the near future. Spectrum-X is well on track to begin a multi-billion-dollar product line within a year. Our sovereign AI opportunities continue to expand as countries recognize AI expertise and infrastructure at national imperatives for their society and industries. Japan's National Institute of Advanced Industrial Science and Technology is building its AI Bridging Cloud Infrastructure 3.0 supercomputer with Nvidia. We believe sovereign AI revenue will reach low double-digit billions this year. The enterprise AI wave has started. Enterprises also drove sequential revenue growth in the quarter. We are working with most of the Fortune 100 companies on AI initiatives across industries and geographies. A range of applications are fueling our growth, including AI-powered chatbots, generative AI copilots, and agents to build new monetizable business applications and enhance employee productivity. Amdocs is using NVIDIA generative AI for their smart agent, transforming the customer experience and reducing customer service costs by 30%. ServiceNow is using NVIDIA for its Now Assist offering, the fastest growing new product in the company's history. SAP is using NVIDIA to build Joule copilots. Cohesity is using NVIDIA to build their generative AI agent and lower
Gas leak at Islamic Revolutionary Guard workshop kills one in Iran.
Serves over 3 billion queries a day for over 10,000 enterprise customers, is working with NVIDIA to build copilots. And lastly, Wistron is using NVIDIA AI Omniverse to reduce end-to-end cycle times for their factories by 50%. Automotive was a key growth driver for the quarter, as every automaker developing autonomous vehicle technology is using NVIDIA in their data centers. Automotive will drive multi-billion dollars in revenue across on-prem and cloud consumption, and will grow as next generation AV models require significantly more compute. Healthcare is also on its way to being a multi-billion dollar business as AI revolutionizes medical imaging, surgical robots, patient care, electronic health record processing, and drug discovery. During the quarter, we announced a new NVIDIA AI Foundry service to supercharge generative AI for the world's enterprises with Meta's Llama 3.1 collection of models. This marks a watershed moment for enterprise AI. Companies, for the first time, can leverage the capabilities of an open source frontier level model to develop customized AI applications to encode their institutional knowledge into an AI flywheel to automate and accelerate their business. Accenture is the first to adopt the new service to build custom Llama 3.1 models for both its own use and to assist clients seeking to deploy generative AI applications. NVIDIA NIMs accelerate and simplify model deployment. Companies across healthcare, energy, financial services, retail, transportation, and telecommunications are adopting NIMs, including Aramco, Lowe's, and Uber. AT&T realized 70% cost savings and 8 times latency reduction after moving into NIMs for generative AI, call transcription, and classification. Over 150 partners are embedding NIMs across every layer of the AI ecosystem. We announced NIM Agent Blueprints, a catalog of customizable reference applications that include a full suite of software for building and deploying enterprise generative AI applications. With NIM Agent Blueprints, enterprises can refine their AI applications over time, creating a data-driven AI flywheel. The first NIM Agent Blueprints include workloads for customer service, computer-aided drug discovery, and enterprise retrieval augmented generation. Our system integrators, technology solution providers, and system builders are bringing NVIDIA NIM Agent Blueprints to enterprises. NVIDIA NIM and NIM Agent Blueprints are available through the NVIDIA AI Enterprise Software Platform, which has great momentum. We expect our software, SaaS, and support revenue to approach a $2 billion annual run rate exiting this year, with NVIDIA AI Enterprise notably contributing to growth. Moving to gaming and AI PCs. Gaming revenue of $2.88 billion increased 9% sequentially and 16% year-on-year.
You mean that?
We saw sequential growth in console, notebook, and desktop
That's my
revenue,
portfolio.
and demand is strong and growing, and channel inventory
That's
remains
Dow,
healthy.
baby.
Every PC with RTX is an AI PC.
Not every day is a good day.
PCs
Today one
deliver
sucks.
Up to 1,300 AI tops, and there are now over 200 RTX AI laptops designed from leading PC manufacturers. With 600 AI-powered applications and games and an installed base of 100 million devices, RTX is set to revolutionize
It's a couple of
consumer
positions.
experiences with generative AI.
No,
NVIDIA
it's okay.
a suite
There's a reason I
of
have
AI
it. You know what I mean?
Is available for RTX
It's okay.
AI.
Yeah.
Mega Break is the first game.
I show when I win and I show when I lose.
Including our large.
It
small
sucks.
language
You know? It definitely
Amazon
fucking
will be
sucks.
Optimized on
Oh,
device.
what can you do?
The NVIDIA gaming ecosystem continues to grow. Recently added RTX and DLSS titles include Indiana Jones and the Great Circle, Dune Awakening, and Dragon Age, the Veilguard. The GeForce Now library continues to expand.
It has been.
With total
Yeah, it's been volatile.
of
Market's trying to decide what's going to happen in the near future. They don't know.
Cloud gaming service. Moving to pro visualization. Revenue of $454 million was up 6% sequentially and 20% year-on-year. Demand is being driven by AI and graphic use cases, including model fine-tuning and Omniverse-related workloads. Automotive and manufacturing were among the key industry verticals driving growth this quarter. Companies are racing to digitalize workflows to drive efficiency across their operations. The world's largest electronics manufacturer, Foxconn, is using NVIDIA Omniverse to power digital twins of the physical plants that produce NVIDIA Blackwell systems. And several large global enterprises, including Mercedes-Benz, signed multi-year contracts for NVIDIA Omniverse Cloud to build industrial digital twins of factories. We announced new NVIDIA...
Oh, I'm not laughing. You know, you gotta laugh, otherwise you cry.
Omniverse to new industries and enable developers to incorporate...
They need a better mic. You know what I mean?
Into USD workflows.
Yeah, today's a big loss. Don't get me wrong, today's a big loss. But it's coming up from like nice gains, you know what I mean?
Microservices in its generative AI enabled content creation pipeline for customers.
So I can't complain.
The Coca-Cola Company. Moving to automotive.
It's a big loss. Yeah, it's a massive loss. It's a ton of money. You know, we could have set up a restaurant without money.
And up 37% year-on-year. Year-on-year growth was driven by the new customer ramps in self-driving platforms and increased demand for AI cockpit solutions.
But yeah, there's a couple of leverage positions in there too that are hurting.
Pattern Recognition Conference. NVIDIA won the Autonomous Grand Challenge in the end-to-end driving at scale category, outperforming more than 400 countries worldwide. Boston Dynamics, BYD Electronics, Figure, Intrinsic, Siemens, Skilled AI, and Teradyne Robotics are using the NVIDIA Isaac robotics platform for autonomous robot arms, humanoids, and mobile robots. Now moving to the rest of the P&L. GAAP gross margins were 75.1% and non-GAAP gross margins were 75.7%. Down sequentially due to a higher mix of new products within data center and inventory provisions for low-yielding Blackwell material. Sequentially, GAAP and non-GAAP operating expenses were up 12%, primarily reflecting higher compensation-related costs. Cash flow from operations was $14.5 billion. In Q2, we utilized cash of $7.4 billion towards shareholder returns in the form of share repurchases and cash dividends, reflecting the increase in dividend per share. Our board of directors recently approved a $50 billion share repurchase authorization to add to our
That's so much
remaining
money.
$7.5 billion of authorization at the end of Q2. Let me turn the outlook for the third quarter. Total revenue is expected to be $32.5 billion, plus or minus 2%.
Man, the mic.
Our
Why
third
is it
quarter
so
revenue
bad?
outlook incorporates continued growth of our Hopper architecture and sampling of our Blackwell products.
It's like
We
overall
expect
market is down
Blackwell
today, you know?
production ramp in Q4.
Oh,
GAAP and
man.
non-GAAP gross margins are expected to be 74.4% and 75% respectively, plus or minus 50 basis points.
It's like
As
overall
our
we were
data
already
center mix
negative.
continues to shift to new products, we expect this trend to continue into the fourth quarter of fiscal 2025. For the full year, we expect gross margins to be in the mid-70% range.
Ooh.
GAAP and non-GAAP operating expenses are expected to be approximately $4.3 billion and $3.0 billion, respectively. Full year operating expenses are expected to grow in the mid to upper 40% range as we work on developing our next generation of products. GAAP and non-GAAP other income and expenses are expected to be about $350 million, including gains and losses from non-affiliated investments and publicly held equity securities. GAAP and non-GAAP tax rates are expected to be 17%, plus or minus 1%, excluding any discrete items. Further financial details are included in the CFO commentary and other information available on our IR website. We are now going to open the call for questions. Operator, would you please help us and poll for questions?
Yeah, this is where it gets interesting, right? This is where we get the shift.
I would like to remind everyone, in order to ask a question, press star and then the number 1 on your telephone keypad. We will pause for just a moment to compile the Q&A roster. And as a reminder, we ask that you please limit yourself to one question.
First question,
And
out of the
your
bat.
first question comes from the line of Vivek Arya with Bank of America Securities. Your line is open.
Boom.
Thanks for taking my question. Jensen, you mentioned in the prepared comments that there's a change in the Blackwell GPU mask. I'm curious, are there any other incremental changes in back-end packaging or anything else? And I think related, you suggested several $1 billion of Blackwell in Q4 despite a change in the design. Is it because all these issues will be solved by then? Just help us guys. What is the overall impact of any changes in Blackwell timing? What that means to your kind of revenue profile and how are customers reacting to it?
Yeah, thanks, Vivek. The change to the mask is complete. There were no functional changes necessary. And so we're sampling functional samples of Blackwell, Grace Blackwell, in a variety of system configurations as we speak. There are something like 100 different types of Blackwell-based systems that are built that were shown at Computex. And we're enabling our ecosystem to start sampling those. The functionality of Blackwell is as it is, and we expect to start production in Q4.
And your next question comes from the line of Toshiya Hari with Goldman Sachs. Your line is open.
Hi, thank you so much for taking the question. Jensen, I had a relatively longer-term question. As you may know, there's a pretty heated debate in the market on your customers and customers' return on investment and what that means for the sustainability of CapEx going forward. Internally at NVIDIA, like what are you guys watching? What's on your desk?
You think 112? We could, for sure.
And how that impacts CapEx. And then a quick follow-up maybe for Colette.
We have PCE also this week by Friday. So that's going to be interesting too.
Maybe a couple billion. What's driving the improved outlook and how should we think about fiscal 26? Thank you.
Thanks, Toshiya. First of all, when I said ship production in Q4, I mean shipping out. I don't mean starting to ship, but I don't mean starting production, but shipping out.
on the longer term question, let's take a step back. And you've heard me say that we're going through two simultaneous platform transitions at the same time. The first one is transitioning from general purpose computing to accelerated computing. And the reason for that is because CPU scaling has been known to be slowing for some time. And it is slow to a crawl. And yet the amount of computing demand continues to grow quite significantly. You could maybe even estimate it to be doubling every single year. And so if we don't have a new approach, computing inflation would be driving up the cost for every company, and it would be driving up the energy consumption of data centers around the world. In fact, you're seeing that. And so the answer is accelerated computing. We know that accelerated computing, of course, speeds up applications. It also enables you to do computing at a much larger scale, for example, scientific simulations or database processing. But what that translates directly to is lower cost
at the bottom of the range
and lower energy consumed. And in fact, this week, there's a blog that came out that talked about a whole bunch of new libraries that we offer. And that's really the core of the first platform transition, going from general purpose computing to accelerated computing. And it's not unusual to see someone save 90% of their computing cost. And the reason for that is, of course, you just sped up an application 50x. You would expect the computing cost to decline quite significantly. The second was enabled by accelerated computing because we drove down the cost of training large language models or training deep learning so incredibly that it is now possible to have gigantic scale models, multi-trillion parameter models, and pre-train it on just about the world's knowledge corpus, and let the model go figure out how to understand human language representation and how to codify knowledge into its neural networks and how to learn reasoning. And so which caused the generative AI revolution. Now, generative AI, taking a step back about why it is that we went so deeply into it, is because it's not just a feature, it's not just a capability, it's a fundamental new way of doing software. Instead of human engineered algorithms, we now have data. We tell the AI, we tell the model, we tell the computer what are the expected answers, what are our previous observations, and then for it to figure out what the algorithm is, what's the function. It learns a universal, AI is a bit of a universal function approximator, and it learns the function. And so you could learn the function of almost anything, and anything that you have that's predictable, anything that has structure, anything that that you have previous examples of. And so now here we are with generative AI. It's a fundamental new form of computer science. It's affecting how every layer of computing is done, from CPU to GPU, from human engineered algorithms to machine learned algorithms, and the type of applications you could now develop and produce is fundamentally remarkable. And there are several things that are happening in generative AI. So the first thing that's happening is the frontier models are growing in quite substantial scale. And we're still all seeing the benefits of scaling. And whenever you double the size of a model, you also have to more than double the size of the data set to go train it. And so the amount of flops necessary in order to create that model goes up quadratically. And so it's not unusual, it's not unexpected to see that the next generation models could take 10, 20, 40 times more compute than last generation. So we have to continue to drive the generational performance up quite significantly so we can drive down the energy consumed and drive down the cost necessary to do it. So the first one is there are larger frontier models trained on more modalities and surprisingly, there are more frontier model makers than last year. And so you have more on more on more. That's one of the dynamics going on in generative AI. The second,
stock continues to get
is
plummet.
although it's below the tip of the iceberg,
Pummel.
what we
Oh
see
man.
are ChatGPT, image generators. We see coding. We use generative AI for coding quite extensively here at NVIDIA now. We, of course, have a lot of digital designers and things like that. But those are kind of the tip of the iceberg. What's below the iceberg are the largest computing systems in the world today, which are, and you've heard me talk about this in the past, which are recommender systems moving from CPUs. It's now moving from CPUs to generative AI. So recommender systems, ad generation, custom ad generation, targeting ads at very large scale and quite hyper targeting, search, and user-generated content. These are all very large-scale applications have now evolved to generative AI. Of course, the number of generative AI startups is generating tens of billions of dollars of cloud renting opportunities for our cloud partners, and sovereign AI. Countries that are now realizing that their data is their natural and national resource, and they have to use AI, build their own AI infrastructure so that they could have their own digital intelligence.
Harvest it? Insane.
Enterprise AI, as Colette mentioned earlier, is starting, and you might have seen our announcement that the world's leading IT companies are joining us to take the NVIDIA AI Enterprise platform to the world's enterprises. The companies that we're talking to, so many of them are just so incredibly excited to drive more productivity out of their company, and then general robotics, the big transformation last year as we
same, right?
are able to now learn physical AI from watching video and human demonstration and synthetic data generation from reinforcement learning from systems like Omniverse. We are now able to
because they say shipping by the end of Q4.
Every robotics companies now to start building.
We're in Q2.
General
Q3, they're going to still
robotics.
develop. Q4,
so
they
you
start
can see that there's just so many different directions that generative AI is going, and so we're actually seeing the momentum of generative AI accelerating.
And to answer your question,
did it hurt? Today's been an ugly fucking
sovereign
day.
AI and
man,
our goals in terms of growth, in terms of revenue. It certainly is a unique and growing opportunity, something that surfaced with generative AI and the desires of countries around the world to have their own generative AI that would be able to incorporate their own language, incorporate their own culture, incorporate their own data in that country. So more and more excitement around these models and what they can be specific for those countries. So yes, we are seeing some growth opportunity in front of us.
And your next question comes from the line of Joe Moore with Morgan Stanley. Your line is open.
Great, thank you. Jensen, in the press release, you talked about Blackwell anticipation being incredible, but it seems like Hopper demand is also really strong. I mean, you're guiding for a very strong quarter without Blackwell in October. So, how long do you see sort of coexisting strong demand for both? And can you talk about the transition to Blackwell? Do you see people intermixing clusters? Do you think most of the Blackwell activity is new clusters? Just some sense of what that transition looks like.
Yeah, thanks, Joe. The demand for Hopper is really strong, and it's true. The demand for Blackwell is incredible. There's a couple of reasons for that. The first reason is if you just look at the world's cloud service providers and the amount of GPU capacity they have available, it's basically none. And the reason for that is because they're either being deployed internally for accelerating their own workloads, data processing, for example. Data processing, we hardly ever talk about it because it's mundane. It's not very cool because it doesn't generate a picture or generate words. But almost every single company in the world processes data in the background, and NVIDIA's GPUs are the only accelerators on the planet that process and accelerate data. SQL data, Pandas data, data science toolkits like Pandas, and the new one, Polars. These are the most popular data processing platforms in the world. And aside from CPUs, which, as I've mentioned before, really running out of steam, NVIDIA's accelerated computing is really the only way to get boosting performance out of that. And so that's number one, is the number one use case long before generative AI came along is the migration of applications one after another to accelerated computing. The second is, of course, the rentals. They're renting capacity to model makers, they're renting it to startup companies. And a generative AI company spends the vast majority of their invested capital into infrastructure so that they could use an AI to help them create products. And so these companies need it now. They just simply can't afford, you just raise money, they want you to put it to use now. You have processing that you have to do. You can't do it next year, you got to do it today. And so there's a fair, that's one reason. The second reason for Hopper demand right now is because of the race to the next plateau. The first person to the next plateau
market data connection
gets to be, gets to introduce a revolutionary level of AI. The second person who gets there is incrementally, better or about the same. And so the ability to systematically and consistently race to the next plateau and be the first one there is how you establish leadership. NVIDIA is constantly doing that, and we show that to the world in the GPUs we make and the AI factories that we make, the networking systems that we make, the SoCs we create. I mean, we want to set the pace. We want to be consistently the world's best, and that's the reason why we drive ourselves so hard. Of course, we also want to see our dreams come true, and all of the capabilities that we imagine in the future and the benefits that we can bring to society. We want to see all that come true, and so these model makers are the same. They're of course they want to be the world's best. They want to be the world's first, and although Blackwell will start shipping out in billions of dollars at the end of this year, the standing up of the capacity is still probably weeks and a month or so away. And so between now and then is a lot of generative AI market dynamic. And so everybody is just really in a hurry. It's either operational reasons that they need it. They need accelerated computing. They don't want to build any more general purpose computing infrastructure. And even Hopper, of course, H200 is state of the art. Hopper, if you have a choice between building CPU infrastructure right now for business or Hopper infrastructure for business right now, that decision is relatively clear. And so I think people are just clamoring to transition the $1 trillion of established installed infrastructure to a modern infrastructure, and Hopper is state of the art.
And your next question comes from the line of Matt Ramsey with TD Cowen. Your line is open.
Thank you very much. Good afternoon, everybody. Jensen, I wanted to kind of circle back to an earlier question about the debate that investors are having about, the ROI on all of this CapEx. And hopefully this question and the distinction will make some sense. But what I'm having discussions about is with the percentage of folks that you see that are spending all of this money and looking to sort of push the frontier towards AGI convergence and, as you just said, a new plateau in capability, and they're going to spend regardless to get to that level of capability because it opens up so many doors for the industry and for their company, versus customers that are really, really focused today on CapEx versus ROI. I don't know if that distinction makes sense. I'm just trying to get a sense of how you're seeing the priorities of people that are putting the dollars in the ground on this new technology and what their priorities are and their time frames are for that investment. Thanks.
Thanks, Matt. The people who are investing in NVIDIA infrastructure are getting returns on it right away. It's the best ROI infrastructure, computing infrastructure investment you can make today. And so one way to think through it, probably the easiest way to think through it is just go back to first principles. You have $1 trillion worth of general purpose computing infrastructure, and the question is, do you want to build more of that or not? And for every $1 billion worth of general purpose CPU-based infrastructure that you stand up, you probably rent it for less than $1 billion. And so, because it's commoditized, there's already $1 trillion on the ground. What's the point of getting more? And so the people who are clamoring to get this infrastructure, one, when they build out Hopper-based infrastructure and soon Blackwell-based infrastructure, they start saving money. That's tremendous return on investment. And the reason why they start saving money is because data processing saves money. Data processing is probably just a giant part of it already. And so recommender systems save money, so on and so forth, okay? And so you start saving money. The second thing is everything you stand up are going to get rented because so many companies are being founded to create generative AI. And so your capacity gets rented right away. And the return on investment of that is really good. And then the third reason is your own business. You want to either create the next frontier yourself or your own internet services benefit from a next generation ad system or a next generation recommender system or a next generation search system. So for your own services, for your own stores, for your own user generated content, social media platforms, for your own services, generative AI is also a fast ROI. And so there's a lot of ways you could think through it, but at the core, it's because it is the best computing infrastructure you could put in the ground today. The world of general purpose computing is shifting to accelerated computing. The world of human engineered software is moving to generative AI software. If you were to build infrastructure to modernize your cloud and your data centers, build it with accelerated computing NVIDIA. That's the best way to do it.
And your next question comes from the line of Timothy Arcuri with UBS. Your line is open.
Thanks a lot. I had a question on the shape of the revenue growth, both near and longer term. I know, Colette, you did increase OpEx for the year, and if I look at the increase in your purchase commitments and your supply obligations, that's also quite bullish. On the other hand, there's some school of thought that not that many customers really seem ready for liquid cooling, and I do recognize that some of these racks can be air cooled. But Jensen, is that something to consider sort of on the shape of how Blackwell is going to ramp? And then I guess when you look beyond next year, which is obviously going to be a great year, and you look into 26, do you worry about any other gating factors like, say, the power supply chain, or at some point models start to get smaller? I'm just wondering if you can speak to that. Thanks.
Man, solar. I think solar is
going to work backwards. I really appreciate the question, Tim. So remember, the world is moving from general purpose computing to accelerated computing. And the world builds about $1 trillion worth of data centers. $1 trillion worth of data centers in a few years will be all accelerated computing. In the past, no GPUs are in data centers, just CPUs. In the future, every single data center will have GPUs. And the reason for that is very clear, because we need to accelerate workloads so that we can continue to be sustainable, continue to drive down the cost of computing, so that when we do more computing, we don't experience computing inflation. Second, we need GPUs for a new computing model called generative AI that we can all acknowledge is going to be quite transformative to the future of computing. And so I think working backwards, the way to think about that is the next $1 trillion of the world's infrastructure will clearly be different than the last trillion. it'll be vastly accelerated. With respect to the shape of our ramp, we offer multiple configurations of Blackwell. Blackwell comes in either a Blackwell Classic, if you will, that uses the HGX form factor that we pioneered with Volta, and I think it was Volta. And so we've been shipping the HGX form factor for some time. It is air-cooled. The Grace Blackwell is liquid-cooled. However, the number of data centers that want to go liquid-cooled is quite significant. And the reason for that is because we can, in a liquid-cooled data center, in any data center, power-limited data center, whatever size data center you choose, you could install and deploy anywhere from 3 to 5 times the AI throughput compared to the past. And so liquid cooling is cheaper. Liquid cooling, our TCO is better, and liquid cooling allows you to have the benefit of this capability we call NVLink, which allows us to expand it to 72 Grace Blackwell packages, which has essentially 144 GPUs. And so imagine 144 GPUs connected in NVLink, and that we're increasingly showing you the benefits of that. And the next click is obviously very low latency, very high throughput, large language model inference. And the large NVLink domain is going to be a game changer for that. And so I think people are very comfortable deploying both. And so almost every CSP we're working with are deploying some of both. And so I'm pretty confident that we'll ramp it up just fine. Your second question out of the third is that looking forward, next year is going to be a great year. We expect to grow our data center business quite significantly next year. Blackwell is going to be a complete game changer for the industry, and Blackwell is going to carry into the following year. And as I mentioned earlier, working backwards from first principles, remember that computing is going through 2 platform transitions at the same time, and that's just really, really important to keep your head on, your mind focused on, which is general purpose computing is shifting to accelerated computing, and human engineered software is going to transition to generative AI or artificial intelligence learned software. Okay?
And your next question comes from the line of Stacy Raskin with Bernstein Research. Your line is open.
Hi, guys. Thanks for taking my questions. I have 2 short questions for Colette. The first, several $1 billion of Blackwell revenue in Q4. Is that additive? You said you expected Hopper demand to strengthen in the second half. Does that mean Hopper strengthens Q3 to Q4 as well, on top of Blackwell adding several $1 billion? And the second question on gross margins, if I have mid-70s for the year, depending where I want to draw that, if I have 75 for the year, I'd be something like 71 to 72 for Q4, somewhere in that range. Is that the kind of exit rate for gross margins that you're expecting? And how should we think about the drivers of gross margin evolution into next year as Blackwell ramps? And I mean, hopefully, I guess the yields and the inventory reserves and everything come up.
Yes, so Stacy, let's first take your question that you had about Hopper and Blackwell. So we believe our Hopper will continue to grow into the second half. We have many new products for Hopper, our existing products for Hopper, that we believe will start continuing to ramp in the next quarters, including our Q3 and those new products moving to Q4. So let's say Hopper, therefore, versus H1 is a growth opportunity for that. Additionally, we have the Blackwell on top of that, and the Blackwell starting of ramping in Q4. So hope that helps you on those 2 pieces. Your second piece is in terms of on our gross margin. We provided gross margin for our Q3. We provided our gross margin on a non-GAAP at about 75. We'll work with all the different transitions that we're going through, but we do believe we can do that 75 in Q3. We provided that we're still on track for the full year, also in the mid-70s or approximately the 75. So we're going to see some slight difference possibly in Q4, again, with our transitions and the different cost structures that we have on our new product introductions. However, I'm not in the same number that you are there. We don't have exactly guidance, but I do believe you're lower than where we are.
And your next question comes from the
Oh,
line
wow.
of Ben Reitzes with Melius. Your line is open.
Yeah, hey, thanks a lot for the question, Jensen and Colette. I wanted to ask about the geographies. There was the 10Q that came out, and the United States was down sequentially, while several Asian geographies were up a lot sequentially. Just wondering what the dynamics are there, and obviously China did very well. You mentioned it in your remarks. What are the puts and takes? And then I just wanted to clarify from Stacy's question if that means the sequential overall revenue growth rates for the company accelerate in the fourth quarter, given all those favorable revenue dynamics. Thanks.
Let me talk about a bit in terms of our disclosure in terms of the 10Q, a required disclosure and a choice of geographies. Very challenging sometimes to create that right disclosure, as we have to come up with one key piece. Pieces in terms of in terms of who we sell to and or specifically who we invoice to. And so what you're seeing in terms of there is who we invoice. That's not necessarily where the product will eventually be and where it may even travel to the end customer. These are just moving to our OEMs, our ODMs, and our system integrators for the most part across our product portfolio. So what you're seeing there is sometimes just a swift shift in terms of who they are using to complete their full configuration before those things are going into the data center, going into notebooks and those pieces of it. And that shift happens from time to time. But yes, our China number there, our invoicing to China, keep in mind that is incorporating both gaming, also data center, also automotive in those numbers that we have. Going back to your statement in regarding gross margin and also what we're seeing in terms of what we're looking at for Hopper and Blackwell in terms of revenue. Hopper will continue to grow in the second half. Will continue to grow from what we are currently seeing. During determining that exact mix in each Q3 and Q4, we don't have here. We are not here to guide yet in terms of Q4. But we do see right now the demand expectations. We do see the visibility that will be a growth opportunity in Q4. On top of that, we will have our Blackwell architecture.
And your next question comes from the line of C.J. Muse with Cantor Fitzgerald. Your line is
What's
open.
your dollar doing? Yeah,
Yeah, good
flat.
afternoon. Thank you for taking the question.
Dollar flat,
You've been
crypto
talking about
flat.
remarkable annual product cadence with challenges only likely becoming more and more given rising complexity in a reticle limit advanced package world. So curious, if you take a step back, how does this backdrop alter your thinking around potentially greater vertical integration, supply chain partnerships, and then thinking through consequential impact to your margin profile? Thank you.
Yeah, thanks. Let's see. I think the answer to your first question is that the reason why our velocity is so high is simultaneously because the complexity of the model is growing, and we want to continue to drive its cost down. It's growing, so we want to continue to increase its scale. And we believe that by continuing to scale the AI models, that will reach a level of extraordinary usefulness, and that it would open up, realize the next industrial revolution. We believe it, and so we're going to drive ourselves really hard to continue to go up that scale. We have the ability, fairly uniquely, to integrate, to design an AI factory because we have all the parts. It's not possible to come up with a new AI factory every year unless you have all the parts. And so we have, next year, we're going to ship a lot more CPUs than we've ever had in the history of our company. More GPUs, of course, but also NVLink switches, CX DPUs, ConnectX DPU for East and West, Bluefield DPUs for North and South, and data and storage processing, to InfiniBand for supercomputing centers, to Ethernet, which is a brand new product for us, which is well on its way to becoming a multi-billion-dollar business, to bring AI to Ethernet. And so the fact that we could build, we have access to all of this. We have one architectural stack, as you know. It allows us to introduce new capabilities to the market, as we complete it. Otherwise, what happens is you ship these parts, you go find customers to sell it to, and then somebody's got to build up an AI factory. And the AI factory's got a mountain of software. And so it's not about who integrates it. We love the fact that our supply chain is disintegrated in the sense that we could service, Quanta, Foxconn,
Out of shot for
HP,
every time.
Dell, Lenovo, Supermicro. We used to be able to service ZT. They were recently purchased, and so on and so forth. And so the number of ecosystem partners that we have, Gigabyte, ASUS, the number of ecosystem partners that we have, that allows them to take our architecture, which all works, but integrated in a bespoke way into all of the world's cloud service providers, enterprise data centers. The scale and reach necessary from our ODMs and our integrator supply chain is vast and gigantic because the world is huge. And so that part we don't want to do, and we're not good at doing. And but we know how to design the AI infrastructure, provide it the way that customers would like it, and lets the ecosystem integrate it. So anyways, that's the reason why.
And your final question comes from the line of Aaron Rakers with Wells Fargo. Your line is open.
Yes, thanks for taking the question. I wanted to go back into the Blackwell product cycle. One of the questions that we tend to get asked is how you see the rack scale system mix dynamic as you think about leveraging NVLink, you think about GB, NVL72, and how that go-to-market, dynamic looks, as far as the Blackwell product cycle. I guess, put distinctly, how do you see that mix of rack scale systems as we start to think about the Blackwell cycle playing out?
Yeah, Aaron, thanks. The Blackwell rack system, it's designed and architected as a rack, but it's sold in disaggregated system components. We don't sell the whole rack. And the reason for that is because everybody's rack's a little different, surprisingly. Some of them are OCP standards, some of them are not, some of them are enterprise. And the power limits for everybody could be a little different. Choice of CDUs, the choice of power bus bars, the configuration and integration into people's data centers, all different. And so the way we designed it, we architected the whole rack. The software is going to work perfectly across the whole rack. And then we provide the system components. Like, for example, the CPU and GPU compute board is then integrated into an MGX. It's a modular system architecture. MGX is completely ingenious. And we have MGX ODMs and integrators and OEMs all over the planet. And so just about, any configuration you would like, where you would like that 3,000-pound rack to be delivered, it's got to be close to, it has to be integrated and assembled close to the data center.
I think so. I think it becomes more of a buying opportunity the lower we go,
right?
Right?
From the supply chain, from the moment that we ship the GPU, CPUs, the switches, the NICs,
And the buyback helps too.
Forward,
It's 50 billion right
integration
there
is done quite close to
of
the location
potential
of the
demand that's
CSPs
pumping out.
and the locations of the data centers. And so you
You
can
know?
imagine how many data centers in the world there are and how many logistics hubs we've scaled out to with our
Short term,
ODM
it was
partners.
expected that we're going to
And
see
so
this volatility. You
I
know, the
think that
question is what happens
because
now that
we
this
show
the
it
sort of
as one rack,
story, the
and
AI
because it's
story, is
always
kind of falling
rendered that
apart,
way
and then we're like
and
leaning
shown
towards the
that way,
recession story.
we might have left the impression that we're doing the integration. Our customers hate that we do integration. The supply chain hates us doing integration. They want to do the integration. That's their value added. There's a final design in, if you will. You know, it's not quite as simple as shimmy into a data center, but that design fit in is really complicated. And so the design fit in, the installation, the bring up, the repair and replace, that entire cycle is done all over the world. And we have a sprawling network of ODM and OEM partners that does this incredibly well. So integration is not the reason why we're doing racks. It's the anti-reason of doing it. The way we don't want to be an integrator.
Well,
we
if you're running
a
AI
technology
systems,
provider.
it's what you got. You know what I mean? Like you have AMD because you couldn't get your hands
And
in
I will now
Nvidia
turn the
chips.
call back over to Jensen Huang for closing remarks.
Oh
Thank you. Let me
man.
make a couple of comments that I made earlier again. That data center worldwide are in full steam to modernize the entire computing stack with accelerated computing and generative AI. Hopper demand remains strong and the anticipation for Blackwell is incredible. Let me highlight the top 5 things. The top 5 things of our company. Accelerated computing has reached a tipping point. CPU scaling slows. Developers must accelerate everything possible. Accelerated computing starts with CUDA-X libraries. New libraries open new markets for NVIDIA. We released many new libraries, including CUDA-accelerated Polars, Pandas, and Spark, the leading data science and data processing libraries. cuVS for vector databases. This is incredibly hot right now. Ariel and Shiona for 5G wireless base station. A whole suite of a whole world of data centers that we can go into now. Parabricks for gene sequencing, and AlphaFold 2 for protein structure prediction is now CUDA accelerated. We are at the beginning of our journey to modernize $1 trillion worth of data centers from general purpose computing to accelerated computing. That's number 1. Number 2, Blackwell is a step function leap over Hopper. Blackwell is an AI infrastructure platform, not just a GPU. Also happens to be the name of our GPU, but it's an AI infrastructure platform. As we reveal more of Blackwell and sample systems to our partners and customers, the extent of Blackwell's leap becomes clear. The Blackwell vision took nearly 5 years and 7 one-of-a-kind chips to realize. The Gray CPU, the Blackwell dual GPU in a co-op
Yeah,
package.
I know. This is the truth.
ConnectX DPU for east-west traffic, Bluefield DPU for north-south and storage traffic, NVLink switch for all-to-all GPU communications, and Quantum and Spectrum X for both InfiniBand and Ethernet can support the massive burst traffic of AI. Blackwell AI factories are building-sized computers. NVIDIA designed and optimized the Blackwell platform full stack, end-to-end, from chips, systems, networking, even structured cables, power and cooling, and mountains of software to make it fast for customers to build AI factories. These are very capital-intensive infrastructures. Customers want to deploy it as soon as they get their hands on the equipment and deliver the best performance and TCO. Blackwell provides 3 to 5 times more AI throughput in a power-limited data center than Hopper. The third is NVLink. This is a very big deal. With its all-to-all GPU switch is game-changing. The Blackwell system lets us connect 144 GPUs in 72 GB200 packages into one NVLink domain, with an aggregate NVLink bandwidth of 259 terabytes per second in one rack. Just put that in perspective, that's about 10 times higher than Hopper, 259 terabytes per second kind of makes sense because you need to boost the training of multi-trillion parameter models on trillions of tokens. And so that natural amount of data needs to be moved around from GPU to GPU. For inference, NVLink is vital for low latency, high throughput, large language model token generation. We now have 3 networking platforms: NVLink for GPU scale up, Quantum InfiniBand for supercomputing and dedicated AI factories, and Spectrum X for AI on Ethernet. NVIDIA's networking footprint is much bigger than before. Generative AI momentum is accelerating. Generative AI frontier model makers are racing to scale to the next AI plateau to increase model safety and IQ. We're also scaling to understand more modalities, from text, images, and video to 3D, physics, chemistry, and biology. Chatbots, coding AIs, and image generators are growing fast, but it's just the tip of the iceberg. Internet services are deploying generative AI for large-scale recommenders, ad targeting, and search systems. AI startups are consuming tens of billions of dollars yearly of CSP's cloud capacity, and countries are recognizing the importance of AI and investing in sovereign AI infrastructure. And NVIDIA AI and NVIDIA Omniverse is opening up the next era of AI, general robotics. And now the enterprise AI wave has started, and we're poised to help companies transform their businesses. The NVIDIA AI Enterprise Platform consists of NeMo, NIMS,
well, the more compute,
NIM
right?
Agent Blueprints, and AI Foundry. That our ecosystem partners, the world-leading IT companies, use to help companies customize AI models and build bespoke AI applications. Enterprises can then deploy on NVIDIA AI Enterprise Runtime. And at $4,500 per GPU per year, NVIDIA AI Enterprise is an exceptional value for deploying AI anywhere. And for NVIDIA's software TAM can be significant as the CUDA-compatible GPU installed base grows from millions to tens of millions. And as Colette mentioned, NVIDIA software will exit the year at a $2 billion run rate. Thank you all for joining us today.
And ladies and gentlemen, this concludes today's call, and we thank you
I'm
for
done.
your participation.
Man, okay. This is done. All right. Let's do a summary of this real quick. Let's see if I got it right. So earnings per share was at 68 cents and revenue ended up being 30 billion, which blew expectations out of the water. That said, Blackwell chips is in fact delayed until Q4. What does that mean? That means that the current chips, the Hopper chips, are gonna be selling even more. And they're gonna continue their demand, or at least to kind of farm what they have coming for them. That's a good thing. At least in my book, that's a good thing. It's what I think, right? Because like you have a product, it's like having the old iPhone and the new iPhone, but you can't make the new iPhone, but you're still ahead. Nobody has a smartphone, so you can still take benefits of it. So they're producing that, people are going to be buying that, and then it's very easy to change from Hopper to Blackwell. In the case that you do, obviously you're going to lose some value on that, but that's okay, because hopefully the software that you're creating is going to benefit from it. Right now, many companies are wanting to stay in the race more than staying on the sidelines, because there's more money in figuring out what the next steps in this technology is going to be. Right? Because it's very hard for us to predict how this will be implemented as we get the AI, like the user interface developed, when we get additional tools like speech, video, and any additional sort of like generative intelligence in a sense, and how we can start to implement it in the personal workload. which still means more more Nvidia chips in those centers. They are the one that are producing the most. They're selling the most chips, and they're probably going to be the ones having the capital to be investing in future chips going forward. Which is interesting. So I don't see the story changing too much. In terms of guidance, the guidance is up from what Wall Street expected by a lot. You know, I think we're expecting, what was it out there? I think we're expecting what, to 32 billion next quarter. Nice. Boom. Man. Yeah, we were expecting 3.17 billion, and I think we're getting 32.5 billion expected. Plus the additional beat, which they're probably gonna have. And that's hope. Well, if they start shipping earlier, it'll be fantastic for them, but at the end of the day, it's okay. They're still farming. Like, if they had competition, this would be a problem. They have no competition, you know? AMD is the only company that's even close to producing at the scale that Nvidia is producing. You know? So short term, this is negative just because every single person is paying attention to this and there's just no more buyers. Right? Nobody wants to take the risk of buying at all-time highs when there is issues in production. That said, medium to long term, story remains the same. They are making massive amounts of money selling chips. You know what I mean? Is there a cyclicality to it? Yes. But we are at the point that every single person is buying computers for their companies. You know, we're early stages of what Microsoft used to be. You know, they're making money. They're slowly getting everything in order. I'm losing so much money. This freaking sucks. It's not nice. Yeah, it hurts. Not every day is a green day, but oh man, the volatility lately, like, the market, like, you know, it feels like there's like less volume in markets right now, and it just, man, it's so weird, you know, because it's like like the movement is crazy. The movements that we've had, you know, August, like we've seen major movement to the downside, and it's every single little piece of news is creating massive volatility, you know. Which, if you're a trader, is fantastic. If you're a long-term investor, it hurts. You know, you gotta bite. You know, you gotta bite your hand and try not to sell in moments like this. You could have, you know, if you had a prediction. No, I'm both, you know. But I thought they were gonna be right, and I knew of the rumors that Blackwell was delayed, right? But there's a couple of trades that I haven't, you know. A couple of trades that I've like had for a while, you know, like 95 was way too good of a price. So I did enter leverage. The reason for that loss is because of the leverage position. It just hurts, you know. Yeah, and plus the overall market is down, you know. So like I think the only trade right now that's green is my hedge, which is still red. You know what I mean? It's just green today, and it's my UVIX. It's my UVIX trade. Everything else is in the red. It sucks. Like everything. Like there's not like there's nothing. Microsoft is down. Yeah, I got a couple of bad trades, you know, but what can you do? I should have hedged into it. The problem was like the thing was like I was gonna hedge and I was gonna sell yesterday, but I just came back from holiday, which was I mean it was a fun holiday. You know what I mean? Cost me a lot more than I anticipated, but You know. But yeah. But yeah, my original plan was to sell just before earnings, just because I knew that there was a chance for a correction on Nvidia, and we definitely got the correction. I just didn't execute on that, you know. But it was a hedge. I was planning to sell some call options just in case, you know. Limited the upside and just like took a little bit of safety in the downside, which would have been nice. I was looking at selling expiry this week options at 66, which right now they're looking fantastic. Fantastic. I would have, you know, it would have definitely taken my, yeah. So yeah, you know, I took the hit. Oh man, we'll see what happens. So we still have PCE this week, but this week it's likely gonna be down with the geopolitical risks that are happening, with the current Fed not wanting to cut, potential job data coming down, recession fears starting to pile up. Like there's a lot of negative sentiment in the market that is just willing to like take hold. It hasn't been able to take hold, but this definitely doesn't help in the short term. Definitely does not. But yeah. Man, I appreciate you staying for the stream, man. Everything. I mean, all of like, well, the thing was like it was weird, right? Too, because it was like SMCI started the downtrend, right? SMCI early morning, like files late their 10K, and then the whole market sort of like the whole AI trade goes down, kind of freaks out a little bit. But yeah, Nvidia takes the whole market down, which is weird, right? But at the end of the day, you know, they are somewhat, you can somewhat make predictions based on the results of others, but in this case I think it's a little bit, I mean, market was expecting a move this size. That being said, I think it's overblown, right? I think there's just too many eyes in it, too many eyes and not enough volume. No worries. Yeah, pop by anytime, subscribe if you want, you know. I'm sure you subscribe, but yeah, I don't know, like I tend to do it when I'm like, you know, I tend to do it when I'm like paying attention to markets anyways. I was definitely going to be paying attention today. I'm probably going to be paying attention PCE, but I know that I've realized that economic data not many people pay attention to. I don't post it other places too. You know. So if you want to like see my commentary, I don't know if you found me on eToro. Yeah, cool. Yeah. Like if you found me on eToro, then it's like I tend to post like my thoughts and views on a day, pretty much like on a weekly basis, I would say. I tend to post, you know, like my trading ideas and all the things that I'm like actually paying attention to. Trying to grow my LinkedIn as well, but we'll see how that goes, you know. But yeah, slowly but surely getting the. Wow, there's a couple of earnings. I missed them our earnings, which sucks, but you know, market's weird. Market's been really weird lately, and it just feels that, you know, we're looking for a direction and we're just not getting decisive data that is like leading us to. Oh, to make a decision, but this definitely does not help. We're still sort of high, you know what I mean? Like if we look at the like, you know, like this is not crazy, you know? It's like okay, like yeah, we come down a bit, you know what I mean? Like it's like sure. Like I tell you, as long as we hold like 120 here, I'm okay. Yeah, I mean like we could definitely like we could come down and then just go bam. Like we could just do like bam, bam. You know what I mean? Hello. It's funny because I just assume, you know, it's like because I also, you know, I speak without having full context sometimes. Like in my head, it makes sense. My girlfriend tells me that at times, like, I can't read your thoughts. And I'm like, why not? It'd be so much easy. Wow. We are breaking this. The question is, do we bounce off it tomorrow or do we continue the downtrend? We might continue the downtrend. Oh, that sucks. But I don't think we do. But like, it's not crazy volume. It's not crazy volume. Ah, man, crazy. Thanks for tuning in, though. I appreciate it. I'm glad, I'm glad. What a fucking day. This sucks. It fucking sucks when you lose money. Oh, man. Oh, man. Oh, yeah. It never gets easier, you know what I mean? Like, oof. Oh, it never gets easier. You know? Remember, like, when I first started trading, $100 used to hurt. $100 right now, it's a counting error. You know what I mean? Like, holy. Now these numbers get for real. Whoa. All I know is that, yeah, I'm losing a lot. How much is Jens? How much is the CEO losing today? That's a big question. He must be pissed. Well, he sold a bunch. That was another thing that was freaking me out too from it. It was like the amount of stock that he was selling, which usually doesn't sell you much. $100, 100, not that. That's not a counting error. You know what I mean? Fucking $100, like $100. Fucking, I've lost $100. Fucking, fucking. Ay, verga. Oh man, whiskey was made for this, like this. Oh, the thing is, just in the market, there's always someone losing more, unless you're like big name. You know what I mean? Oh, fair enough. Takes time. Yeah, like sure, you get started. It's hard. But it's like the gym. You know, like, I find like traits like this, like like you're gonna feel bad when you lose, but like in a trading day for sure. But you get used. You don't get used to it. You just get accustomed to it. You know what I mean? Doesn't hurt less. It just you get used to the pain. It's like it's weird. I remember my first losing trade was an oil trade that I had done with leverage. You know. You know what I mean? Oh man, it hurts. It hurts. Damn. It's just like this continues, like this consolidates the downtrend, which sucks. That's the reason I record them. That's the reason I record them. Like if you looked at like it's funny because in the channel you can actually see like the last earnings, and it's like it'll be interesting to like compile, and like put everything together because I like showing the number to kind of keep me a little bit honest, and then I was at negative 2K today. I could have sold a negative 2K. Oh, damn. Oh, like I'm not in that much leverage either. You know what I mean? Like it's just like a couple of positions that I was like, fuck it. I'm still in the green on those positions, but wow, it hurts. It hurts. But yeah, you keep them, and then you remember. You know what I mean? And then this keeps me honest. Because it's like I want to do like a short where it's like win, lose, win. Oh man. Oof. Like I like the numbers. I like the numbers. What can I say? But I like the Nvidia stuff. But all right. Wow. Thanks so much for watching. I'm gonna go to bed. I'm gonna go pass out because it's so late here. It's so late. Oh man. Wow. right there. Oh man, it hurts. I appreciate you staying by. Come back anytime. You're more than welcome here. I love the chatting. Oh man. Oh, hurts. Let's see what tomorrow. UK baby. UK. In the United Kingdom. Yeah, it's like 11:30. It's not late. Yeah. Europe. Oh man. Like and it's bouncing off. It's probably gonna bounce tomorrow. Probably sell off in the morning as traders kind of get away from their positions, and then we potentially see a rally. What do we have tomorrow? Let me have a look. What do we have tomorrow? We have jobless claims and GDP. Ooh, that's interesting. Like you see, like some estimates estimated 37.9 billion. Deal. Like chill. Damn. Damn. All right. Thanks so much, Don Silva, real MVP. Thanks for tuning in. All right. Peace out. Tomorrow's gonna be interesting with GDP. What do we have? And then we have PCE Friday. I mean, it's a good week for data. It's a good week for data. Oh man, this sucks. But well, that's what we get paid for. Sometimes that's what we pay for. Oh man, good night. Good night. Good night. Oh, and cheers. Ching ching, man. If it was Friday, I'll be drinking. All right. Peace out.